If you roll $1 million up, you're gonna get $5.5 million in probably 3 to 5 years, maybe 7 year max. You can't make that kind of money anywhere else on your money.
No.
And I try to explain that to people, like, they're like, what do you mean? I'm like, and people are like, well, what if it doesn't work out? I'm like, guys, these machines are so big.
It's too big to fail.
Too big to fail. It had to be catastrophic.
They happen,
but it had to be catastrophic.
Yes.
Hey everyone, thank you for joining us today. I want to give a quick shout out to our sponsors, Service Titan and Rilla, our technology of choice to helping us scale and grow our business and making sure all of our viewers have the technology to scale their business so when they want to sell it, they're able to. Welcome to the Roofing CEO Playbook Podcast. Build it to sell it. We're here to cut through the noise, all the rhetoric, to show you how to build your roofing business, make it profitable, where you make a boat ton of money, and the cherry on top, when you're ready to sell, you can sell to a private equity firm and change your family's life. I'm sitting with Tim Russell today, CEO of Canopy Roofing, and we're going to talk about buying roofing companies, selling roofing companies, what's going on in the roofing industry, all the money that's coming into the roofing industry from private equity firms, from people like Tim, what he's seeing out there with manufacturing, what he's seeing out there with distributors, what he's seeing out there with the companies that are growing and the ones that are dying. We're going to talk about all that today. Tim, welcome. Thank you for spending time with me and the mobile sprinter here today on the way to New York with me.
Hey man, thanks Lance.
So we're actually on our way up to New York right now for a private equity event I invited you to. Background on me and Tim, we probably met a year ago now, close to a year ago now. Instantly became good friends. I think I met you through Tom Howard, right? Or
someone. Through Tom, through another person.
Yeah.
We were hunting down Service Titan for roofing.
You were hunting down Service Titan for roofing. You called me up and you said, hey, listen. I said, hey, listen, you don't believe me, come in, you just come take a look at what we're doing.
Absolutely.
You came in, you started looking at what we're doing. We wound up becoming good friends. You came down a roofing conference process and just hanging out, talking on the phone a lot. I asked you for a lot of advice. Tell people who you are, Tim, and what you do. We're going to get kind of into the story and talk about LOIs and buying companies and everything. But tell them who you are and what you've done. And by the way, he took Turn Point and grew that and recapped that and sold and made money too. If you don't know the Turn Point, just look it up. Go ahead.
Yeah, that was probably the first. I'd been in the landscaping industry for 25 years, commercial landscaping. Saw that company go public in 2016. It was about a $2.5 billion commercial landscaping business, and left there in 2018 to go work with a friend of mine who was the CEO. And Canopy Services at that time was a $40 million business in HVAC and plumbing.
What did you take that to finally before you recap?
We sold it the first time. It was about $365 million in revenue.
40 million to 365. How long did it take it?
2 years.
2 fucking years.
2 years, yeah.
When you think things aren't possible, how hard was that? Because listen, most people will never get to 40 million,
right?
Let alone get to 265.
Yeah, 365.
365. Sorry, Jesus Christ. Like, how hard was that? I mean, you had to be on a plane every day.
Yeah, I mean, it's a lot of travel. You're meeting with founders all the time, hearing their stories and meeting folks. And we always say, like, shaking hands, kissing babies, and just, trying to find the right fit for what we were building. So so in 2 years, we took it to 19 brands. We recapped it in 2020. And then in 2021, we did 21 deals. So we went from 19 brands, we added 21 in 21, and then when I left to come in the roofing business, we were 62 brands.
62 brands.
$1.4 billion in revenue.
$1.4 billion. You're the CEO of Canopy, which, you guys, Trivest is the bank, right?
Trivest is our partner.
Yeah. So Trivest is the partner. Big partner, nice partner to have. Very nice partner to have.
Absolutely. It's interesting because there's so many different private equity models out there that I went back to Trivest. Trivest was the first PE backer for Turn Point, and then when we transacted, obviously they went away and we had a new partner. But that's one of the reasons why I went back to Trivest, because I like their model. I like how they approach things. They're fair and honest. They're trying to do good deals with founders. So that was what intrigued me about getting into the roofing space. Now, I don't know if I knew how hot the roofing space was a year ago, or whenever I joined at the end of 2023. But glad I did. It's been fun.
You used the word hot. It is hot, but it's a misconception of, I was talking to a guy the other day. He did $5 million in business, and he said he wanted $2 million for his company. And I just started fucking laughing at him, right? And we're just talking, we're bullshitting. And he's like, but I want to see the $2 million in cash first before I even sit down with someone. I said, it doesn't work that way.
Like in a box?
No, like he wants to say that you're good for it. Oh. And I'm like, dude, I don't buy companies, so I got no dog in the fight, so I don't give a shit what you do. But I'm gonna give you some friendly advice and just tell you how the real world works, where the big boys, when people actually give you money, this doesn't work like, hey, let me show you my account here. I got $2 million right here, now we'll talk. It's, right. Who are you? Is there a synergy? Can you talk about that? Because people just think it's hot and you're going out and buying everything you touch. And that's not the case. You might buy 1 out of 100 contacts, if that.
1, maybe 2.
Out of 100 contacts?
Yeah.
Okay, I'm less than that. And you know that, just because my model's very different. I need the operator there, running it.
Yep.
So, and you do too.
We do too.
But, yours is more stabilized.
Look, there's 1,000 different models out there, right? I think our model is a little unique because we need the founder or the owner to stay. We don't have extra people to come in and run the business, so we're really investing in strong brands and growing markets with a good team. I mean, that's the simplicity of the model. But, there's a lot more to it, right? I mean, it's got to be financially stable. The business has to be showing growth over time. They have to be able to have, a team that can take on growth, because our organic growth model is what drives the arbitrage value between what you buy the company for ultimately and what we sell it down the road for. So, it's not every business. And we encourage the founders actually to go out and do their homework. Talk to everybody. Call all of our founders to see how their experience was, but talk to some other private equity groups out there to see what their model is.
You do business with 1 out of 100 contacts, right? And people don't realize, even though those contacts, you're responding to every contact. You're talking to them. You're giving every contact at least half hour to an hour of your time.
100%.
That's the reality of it, right?
Anybody wants to talk, yeah.
And then once you get into it, you find out it's not what they say 90% of the time.
Yeah, that's true. It's usually not what they say.
Right?
That's right.
They're so full of themselves, they believe they're the company, and you damn sure don't want that guy.
No. It's interesting. I have a rule. I don't have a lot of rules. I'm a little bit of I'm a trailblazer by culture index, if you will. But if they don't talk about their team, we do not continue the conversation. And so many founders, they say they care about their team and they care about the company and everything else, but when they get in a room and it's me, it's like, man, you're not even talking about your team at all. That's a red flag.
What I find amazing is, because my model, when I sell a company, everyone gets money. Yeah. All my team gets money, everyone. I mean, Jacob nearly got money last time I sold a company, yes or no? Everyone does, right? Everyone gets money. Everyone eats at the table. It's just a very different model. These guys work hard. It's a lot of fucking hours. I mean, their salaries aren't the biggest. They're relying on me selling companies, all my people, right? It's amazing to me how many founders don't pay a penny to anyone that helped them build their business. They keep all the money, they walk in on Monday and say, we're sold, and pretty much fuck you, and
happens more than you would believe.
That's amazing to me.
Which is a shame.
And
the ones that chirp the loudest, actually, that, I did this for my team and all that, usually they're ones that get the least. Which is amazing.
What percentage, I call it whatever, what percentage would you say actually gives money? Says, no, I give almost 10 to 15% of the total take to my team. That's what it comes out to be, about 10 to 15. How many people do you see doing that?
100% of ours, because we build it into the model.
Well, that's what you guys do.
Yes.
What do you think I got it from?
Yeah. So, overall, I mean, look, people are generous, so they really are. I mean, the industry is good. It's blue collar, hard working bunch of folks.
Well, how many people are doing that though? 10% give away.
I'd say half.
That's good. That's more than I thought.
Half the people.
That's good.
Yeah.
That's more.
Yeah.
That's more than I thought.
I would hope. I mean, I don't hear that many complaining, but yeah, it's just, look, I mean, this industry, most people don't know how much actual money can be made in the roofing business, as a salesperson or a rep or an operator. It's kind of it's a very unknown area of a career. you know. So that's kind of one of the things I've seen. And the other part of it is too, like if you do this deal, right? So you get to a close and you find a great partner and all that, and you can bring some folks in the leadership team along. The instant pop you get from that is pretty dramatic.
Let's talk about this. I'm very transparent with people. I think I told you I shut down my New York and my Atlanta branch. Did I tell you that? Mm-hmm. It was all because of the leaders. The leaders just couldn't get it done, and I'm not going to run the business. I mean, You're not going to run the business. You can't, right? You just can't, right?
No.
Talk about how important is that leader. I don't think people understand the value of the leader, that local leader. Yeah. Can you talk about, like, do you believe the business goes or dies because of the leader?
Oh, yeah, 100%.
Okay. All right, I just want to make sure.
The business itself, that P&L can never run past the capability of the leader, ever. Like, so the lid on that business is the leader. So the P&L is only going to grow as fast, or that business is only going to grow as fast or mature as much as the capability of the leadership. So we talk about it a lot. So you know, when we start to bring in brands that have traditionally been run by a founder, sometimes you know, you change from cash to accrual. You know, so that's a big shift sometimes when they only care about what's sitting in the bank account.
Can you explain that? Because most people don't understand accrual accounting and cash are two different ones. Can you explain that?
Yeah, in the quick sense, I mean, cash is cash, right? So what sits in the bank account after you paid your bills and your people and your vendors and you collected money from the customers, that's your cash. Mm-hmm. So a lot of folks think about the value of their business is what sits in the actual bank, which is not how businesses are valued. So then on the accrual side, accrual is just timing, right? So accrual is what you performed in the month, not sold, but what you actually installed. What you installed, how much it cost you to install it, like the actual materials and shingles and labors and subs and all that kind of stuff, what the GP was, and then what your SG&A cost for the month was. Like, that's the true definition of like a GAAP accounting accrual books. And then for us, that's how we can start to determine the strength of the business over time, because we can look at, okay, what's the consistency of those monthly performances? Like, if anything, if I was a founder today sitting in the roofing business, the number one thing I would do is I would figure out how to predictably create GP, what my gross profit is every single month. Not just the percentage, right? So none of the up and down.
What's a good gross profit? 50%?
Everybody's different, because some people are putting sales commissions up in COGS. And
let's say you put sales commission up in COGS. I believe it belongs up there.
If you're 35 with sales commissions in cost of goods, you're doing pretty good. 40 is the target.
We aim for 50, but we're at like 43 awesome. Right now.
Yeah, 40 is the target. I mean, 35 would be for a founder, like running their own little business. Yeah. 35 is that's like the base entry.
But I'm assuming you guys are going for 40 and above.
Yeah.
Right. I mean, that's where the money really starts to print.
We finished 2024 at 44.7 or something like that.
So here's a funny story, right? Because I just said 43, you have 44. Like, do you know what story I'm going to tell right now? When me and Bill came up to...
Yeah.
So we went up to visit their one company. What's the name of the company? It was so nice people.
Adam Valancourt.
New Hampshire. Which they probably would have crushed our numbers if they had their phone number on their website, but that's a whole different conversation. But now you gotta remember, me and Tim have never done business together. We've never done a deal together. We're just friends. There's two people trying to make each other better, right? So I go up there to visit a shop tour. He came and did a shop tour to ours. I said, listen, I want to show you my P&L. Can you show what I'm doing better? You help me with my HVAC company. So now my roofing company, so he gets his roofing company, compare them. Our GP, and there are two companies that ran totally different. You guys, we ship to the job every single material. You guys house them there, run them. They were inside of 1% on the GP and 1% on the net.
Yeah.
And the revenue was
almost
identical.
a mirror business. Yep.
Yeah. And we just started laughing. And it just goes to show you there are no right or wrong. It's a matter of, can you make the GP and can you make the net?
Yeah. Understanding what it costs to produce the work, right? So then it's just math.
I mean, it is pretty crazy, like two people, because that's your flagship.
Yeah.
Mine was my flagship at the time.
Yep.
And they were literally identical, two businesses.
Yeah, it was interesting.
Two different models. What percentage of people are on GAAP that do GAAP accounting?
In the roofing business?
That you've come across?
Not many.
1 out of 500?
Yeah, probably. That's probably a good number. Yeah. And you don't need to be. It's okay. You can, but as long as you track it a certain way, you can kind of transpose it into GAAP, accrual accounting. But, for the general founder, there'd be no reason for them to do that anyways, because it's all tax accounting anyways, right? So there's a different reason why, we have to have audited financials. where the general founder of a $10, $12 million roofing business doesn't have to.
Let's talk about that. You need audit financials because you guys are investing people's money. You're investing people don't understand when they think, oh, Trivest, they think it's some guy like LB Capital's all my money, as you know. I've never taken any money from a fund, any investors. You guys are stewards of big people's money. They're investing, saying
institutional money,
saying, hey, listen, we're going to go beat the stock, the S&P, which is going to give you 8 to 10%, whatever. You guys' returns are trying to give people probably 20% a year. 15 to 20 ballpark.
Yeah, I mean, when it's all said and done, deal by deal, it's like
all said and done. If you go,
probably 15 to 20%.
Yeah, and you look at that, and that's why you need the audited financials because you guys are playing a big game. I think when these young roofers out there and these roofers that not so much money, I think they just think you're going to just come over and write them a check. I believe it's like the misconception. Do you feel like, hey, this guy wants my business so bad, I can just throw a number out there and he's going to pay? Are you seeing that right now?
Yeah, I think it's just the knowledge about how it works, right? So you're training a whole industry about what this is, and the interesting thing is what they think happened in HVAC. They just watched it from the outside, so now they think that like all these HVAC guys got these like brown bags delivered to their doorstep or something, and it's not that. So it is interesting. So you're having to explain how it works and explain most private equities are working out of a fund. So they have to go out and they raise that fund, right? So they're getting institutional money, they're getting pension money, they're getting all these different, investors into that fund. So it's very, it's very programmatic. It's not just like, hey, this bunch of money sits in a vault somewhere. I mean, this is dealing with like real people's money. So yeah, we try to walk them through that, try to explain it, try to also explain what their rollover means. Like the individual roofer founder that got the money for the deal.
What percent are rolling over, do you think?
People like deals?
Yeah, deals.
100% of the deals. Yeah, all the deals are rolling over, and I think even across the industry, I would bet that. And the only time somebody's not rolling over is when it's an exit. So if the founder's leaving, then they generally don't roll. Retiring.
Yeah, I understand that part. I guess my next question would be is, why wouldn't me? I try to roll over them. I almost am brutal about it because I want to. Like I'd put it all in. I'd put it all. Like I'm a savage. Like we'll talk about that. I want to put as much as Are most people like me trying to put as much in as they can? Do they understand what they're doing with that fucking money? Like it's a no-brainer. Or are people
it's not
leery?
A no-brainer. They're leery because they don't know. They don't know what that means, right? So if you're going to roll over whatever 15, 20% of your proceeds into the platform of the business, they don't know like what does that mean? Like what's my expected outcome, right? So Trivest over their past 18 deals, they've gotten 5.5x, which is unbelievable.
But let me explain that to you guys in simple terms. If you roll $1 million up, you're gonna get $5.5 million in probably 3 to 5 years, maybe 7 year max. You can't make that kind of money anywhere else on your money.
No.
And I try to explain that to people, like they're like, "What do you mean?" I'm like, and people are like, "Well, what if it doesn't work out?" I'm like, guys, these machines are so big.
It's too big to fail.
Too big to fail. It had to be catastrophic.
They do,
but it had to be catastrophic.
Yes.
It had to be catastrophic, and they're going to bring the leadership in to turn it around before it fails. There's just too much money. They'll do.
Yes, you get a lot of support around you.
You do.
You're not left on your own.
So my advice to anyone watching this podcast, I'm going to tell you right now, if you get a chance to roll up, do what I do. Try to start with 35, 40%, and they're going to weed you back to 25, 20%, and you'll be happy with that. Yeah. And like your money is going to, there's no better feeling. And I'll give you an example. I rolled up to one, and literally about 27 months later, they sold.
Mm-hmm.
I didn't know. I got a letter. I opened the fucking mail, and they said, contact us. You can either take your money out, and it's worth X, or you keep it and keep going.
Or take some, leave some.
But I didn't put that into the letter. Yeah. So it was a 1-page letter.
Yeah.
So I just said, let me call these fuckers. Call up. I'm like, all right. Talk to the person, talking to them. I'm like, how much is that worth? I said, that's more money than I got on my original deal.
That's what I was just going to say. That happens depending on when you get into the platform. Like early days, most people.
I was the second one on the platform.
Yeah. So most people early days, they'll get more on the second turn than they did for the original deal.
I did. And I was like,
it's a no-brainer.
I was like, how much?
So that's
I said, just give me half and take the other half up.
Yeah, keep that.
She said, no problem.
Yeah.
I said, she's like, well, wire you the money on Friday. I'm like,
so that's
another
wife,
piece of this.
Nuts. Yeah, that's another piece of this though that makes it even more complex, right? So I always talk about the totality of the deal. So like, okay, so everybody's confused about the multiples and all this kind of stuff sometimes. They don't know what it really means. So the multiple, that's getting paid on the EBITDA, right? So you get whatever the multiple is, doesn't matter, but you get paid on that multiple for your EBITDA. And then what's interesting is, what's the track record of the person that you're marrying? It's a marriage, right? So what's the track record of that group? What do they get? Show me the last 10 deals you did, and show me the platforms that sold, and how much multiple did you get on that, and what's the return on invested capital? Because if you get in early, or even if you get in late, that's a different scenario, but even if you get in early sometimes, that pop that you get in the second turn is huge.
It's huge.
Like now it's both pieces added up. Okay, now if somebody's gonna be a turn less, one multiple less, but if they get a better outcome than the other person, isn't the deal worth more?
Let's talk about the multiplier, because I think the multiplier is a big deal, and I think it's not a big deal. And like, you know how I feel, like, and I know I got the highest multiplier besides Josh Sparks in the roofing space. I know that for a fact, right? Like, so I'm good with it, right? But I also haven't built what Josh Sparks built, so he deserves everything he fucking got, right? Who's going to argue with him? But my point is that I look at it this way. If you, number one, the multiplier doesn't matter if the deal can't get done. Yeah. I mean that. Number two, the multiplier doesn't matter if I got to deal with an asshole.
Yep.
And like, people don't understand, like, your mental health is so important.
Getting through a deal, yeah.
Because money will never make you happy. Like, people are like, and I always say this to people, I've never hit a goal in my professional career that's ever put a smile on my face or made me feel good about myself.
Right.
It's sad to say, I just never have. Every company I've ever sold, I never jumped, I never celebrated. I think it's sad. It's just
get up and go to work.
It's correct. So like, I believe this about the multiplier. It does me no good to get a multiplier if I got to put all this money into escrow, and there's all type of escrows and earn-outs, right? Yep. So like, it's real.
Or you get retraded at the end. They deduct your EBITDA.
I've never been retraded. I've never been retraded.
That's good.
I think people know my personality. Actually, it's not true.
I don't think I would try to retrade you. But.
No, that's not true. So when I sold One SEO, an Indian guy, and this is why I don't ever let anyone meet my leadership team for any companies I sell. The worst mistake I did. Big guy. Fuck it, I'll say his name. His name was, what was his name? He's the founder of Info USA. I forget his name. Oh my God, what was his name? But whatever, he founded Info USA. Everyone knows what that is, right? Guy flies in, meets us 3-4 times. We sign off on quality of earnings. We sign off on everything except for the purchase agreement. It was a simultaneously closed. We're waiting on Tuesday. It's now Sunday afternoon. He asked me to fly in and meet my leadership team before closing, him and his whole legal team and this and that. At this time, you're naive, you just think it's done. Like, everything's signed off on. Even though you didn't electronically sign, which is mistake number one on my part.
Yep.
This is where you live and learn, right?
That's it.
And we go out to dinner. We go to La Stalla. Great dinner. We're there for 5 hours, 6 hours. Guys talking. On Sunday, I'll never forget, I'm about ready to take a nap. Everyone's at my house swimming, and I see an email. His email comes through and says, Lance, it was like one paragraph. It was like, after consideration, after everything, I feel like the multiplier I gave was too high. We want to go with this multiplier, and we can close on Tuesday. Let me know we're good to go. And I wrote back, my exact words is, I take this as your official way of breaking the agreement. I'm not closing. I had a decision to make. It was Sunday.
Right.
I called my sister up. I'm like, you're not going to fucking believe this. Now he met my whole entire leadership team.
Yep. Went
Went out to dinner with them. Right now, they think we're closing Tuesday.
Right.
So I had to make a decision. Do I take this scumbag's
ultimatum? It's an ultimatum.
Correct. And just sell?
Yeah.
Or do I just say, fuck it, and say, I believe in myself, and these guys are still going to follow me?
That's all pre-planned. You know that.
Oh, without a doubt.
That's their playbook.
That's their playbook. So I said,
he had that email like in his archives.
I responded as soon as I got off the phone with my sister. Fucking killed the deal. go in on Tuesday. I wind up selling it a year and a half later, not even, for twice the amount.
Right.
But I never let anyone know. And that's like my sticking point when I sell a company. I'm like, you can meet Jolene, you can meet Bill,
right.
You can come see our operation, you can see what's going on. You can be the insurance salesperson, you can be whatever the fuck you want to be.
Yep.
Be Santa Claus, I don't give a shit.
Right.
I got nothing to hide.
Yep.
But you're not telling, because people get anxiety.
Right.
And it took me about 6 months to get my team back on board with the vision of, so.
Yeah, that's.
Can you talk about that, about like the retrade and how that, and like that's another thing about closing. The multiplier doesn't matter.
It doesn't matter. If
you
can't get the deal closed, it doesn't matter what the multiple says on that piece of paper. You want to partner with somebody that has a track record of getting deals done, and you also want to partner with your own third party folks, your accountant, your lawyer, your tax guy, like those people. You want to make sure that they've done deals before. They want to get the deal done. They don't go into it trying to nitpick, all these different points on these, legal docs, because you could drive up a legal bill that's now $150,000.
I just told you my last legal bill was 2.5 times more than every other exit because of their outside counsel.
Right. Yep. So there's all of this. So that's cost, right? So again, it doesn't matter what the multiple was. If you have to pay twice as much to get the deal done, then who are we fooling here, right? So it has to be. So you asked about like the retrade. So the retrade is interesting because that is a true model. Like there's a private equity model out there that
probably 80% of them, not you, not a Vertex, like the big boys. Just they don't want their reputations ruined.
That's right. Yep. So yeah, that's very fair. So what's in the term of the LOI, that's what you want to close on. But in some of these models, what they'll do is they'll get through the quality of earnings, which is another, interesting thing in itself, right? So bringing a founder through the quality of earnings and all that to get the revenue where it needs to be and the earnings where it needs to be. Then they'll start to do deductions, right? They'll say, oh, well, you had a big project in here, so we're going to deduct that. Or you had a storm roll through. So a lot of private equity companies aren't giving credit for storm work. Because it's not recurring, right? So it's a one-time thing. So they'll get through all this work, and then at the end they'll say, okay, I know we told you we're going to pay you X, but because of these variables that we found through the quality of earnings, now we're going to pay you Y.
Mm-hmm. And the reason is this, though, is, and I do believe this, I call part of it seller's fatigue.
Yeah.
They get excited.
Yep.
And this is the problem, and I said this to someone last night. He sold Scylla. To Morgan Stanley, right?
Yeah.
So do you know Walker? Do you know Martin? Really nice guy, right?
Nice guy.
And his son wrestles with my son, and we're talking. And I was telling him what happened on my last deal. I was telling him about the fucking wall. He's cracking up laughing. I'm like, listen, I'm getting out of the roofer for this. Like, if you call me up and you ask me to split a demising wall,
correct, for $20,000.
$20,000. Like, no offense, I'm getting out of my roofer. Like, we're not going. And not that I won't sell a company to you. It's just I'm not going to go through what you just put me through and give you access to all my companies now because. Now I know what I went through, and plus I sold too many companies. But that's a whole different conversation. But what was my point? I was telling you about
Scylla when he sold.
Yeah, so like he expected a colonoscopy. He expected what's going on. He knew how big it was.
Yeah.
These guys when they retrade, all these other people they want to retrade. It's their playbook of just you have seller's fatigue. You're gonna like my first time. I told him last night we were talking about it. Was Dylan. Did you ever hear of Dylan HVAC? I think I told you the story.
Yeah.
And I sold it myself. And when I found out I was going to keep over 8 figures myself and my partner was going to keep it, I'm like, for fucking less than 2 years worth of work? This is crazy. And no one's ever handed me 8 figures at one time.
Right.
Like I don't care. Like, yeah, I was a millionaire. Yeah, I was doing good. But no one ever said, here's 8 figures.
Right.
And you're going to get that. And hey, Mike, here's 8 for you. And you still have some extra money. And I remember thinking, I'll do whatever it takes to get this deal done. And I did. And it was a great experience with Apex. And they never retraded. They closed. I can't say I'm good friends with Jacob because of it. Their M&A guy. We're very close because I have gratitude and appreciation for him because he taught me so much about this industry and space. But like that's why. But after you did 4 or 5 deals, you don't get seller's fatigue and the money doesn't matter. You're like, wait a minute, there's more to this than the money because after that money comes, you're obligated to help them run that business, transition that business. Yep. And if I can't stand being in a room with you and I'm going to be woodpecker, no matter how much money you give me.
So let's talk about this too. So in that scenario, now let's talk about an earnout. So earnout's a whole nother thing, right? But what you just said, So now when you do the deal as the founder, right? I don't like earnouts personally for a lot of reasons, because I think it ends up, in a fist fight in a parking lot usually. So because the company that you're joining is going to want to put things in like Service Titan or a financial system or marketing, or there are standards that get brought in to help drive organic growth. Well, if I'm the founder now, I see all these costs coming in. Like now that affects my earnout. So now how does that get treated?
So I agree with you. So I've been paid every one of my earnouts so far.
Mm-hmm.
So far.
Yep.
I'm going to say that very, very so far. I've been paid every one.
Yeah. Like
80% of all earnouts don't get
look,
paid. And I heard that stat, and I was like, there's no fucking way, because I've gotten every single one.
Yeah.
But then the person said to me, Lance, would you not pay you your earnout?
Right.
I'm like, what do you mean? He's like, Lance, like, you'd be the last guy that I wouldn't pay the earnout to, whether I hit it or not, just because your reputation, what you've done, you're going to tell everyone not to do business. Like, so it ain't why even have that argument?
Yeah.
Like, there's
structure. Look, there's structure you can put in place.
I did a great one. Tell me what you think about this one. I want to ask you an honest question. Mine is revenue, which we know we'll hit the revenue goal. And if we don't, that's on me. I shouldn't be paid.
Yep.
Right?
Yeah.
Then we have materials, labor, commissions, and marketing has to stay at 10%. That's my number, 10 to 12%, right? So if I go to 12%, I'm losing 2%, which is fine.
Yep.
But as long as I hit my GP, exactly what I was running at when I sold the business.
Okay.
That's my earnout.
That's fair.
Fucking ain't right. I was like,
right.
That's a fair earnout for both of us.
Yep. Yeah. Yeah.
Like, that's about the only way you have a fair earnout, I think.
Yeah, unless you're truly like some of the platforms will have earnouts, like the original business, the original investment, and whatever it may be, may have an earnout because you're not really messing with that business too much. You know what I mean? That's the platform business. So like you don't have a system to bring in or support or shared services or things like that. So you're not going to add cost to that business. But it's also a way to actually get the founder to a true value that they think the business is worth, and grow the business at the same time. So it can be a win-win. It absolutely can be.
So I hear horror stories, and this is, I want to do just a few myths that you hear out there, because I know the answer to this. Is it true when you go in to a company, the first thing you do is start firing the leaders and the best employees and say, we're going to cost reduction here?
Not our model, no. We're investing in the team.
But anyone in home services, that can't be their model. The fucking employees are the asset.
Yeah, I mean, why would you buy the business then? Just go start your own.
That's what I'm asking you. Like, but how many times do you hear that when they talk to you?
Yeah, I've heard it. People, that absolutely, has it been done? Yes.
Really?
It's been done, no doubt about it.
Have you ever seen it yourself, or you heard it?
I know of companies that were purchased by a private equity group that it's happened to. Yes. Seen it, yeah.
Did that private equity firm make it, if you don't mind me asking?
They're struggling. They don't get the same results as the
other
ones.
I figured.
I mean, if you're investing in a team that's bad to begin with, then the business is probably bad performing, right? So, so there's a different model out there. There's a model where the private equity comes in and invests in a broken business. So they're buying it for pennies on the dollar.
Yeah.
That's a whole different deal, though. Like, they know they're going in and making wholesale changes. They're going to replace the team.
It's almost like what I do.
Yeah, but you don't go in and just fire everybody, though.
No, I try to coach and bring everyone along.
You're teaching. You're guiding them through.
Correct.
Yeah. So, but that myth, you call it, does it happen? Yeah, it's a small percent. It's the old 80-20 rule. 80% of the time that doesn't happen, 20% it does, and that gets now that's the that's what's considered the normal thing, and it's not. It's not normal.
Roofers, and I'm sure you hear it is. You'll hear JF is way better than Owens Corning. All this nonsense about the fucking shingles and the manufacturers. Do you believe any of it matters?
No. It's funny. I equate
Does
it
it come
down
into your buying equation? Does it come into your buying equation here with?
No, we're agnostic of brand because I always tell founders, I don't care what you sell, what brand, because it's you. It's your brand. It's your brand that you're selling. It's the Adam Valancourt brand, or it's the Larson brand in Wisconsin. It's not, most of the consumers wouldn't know the difference between a GF and an Owens Corning if you sat in front of them and you had to tell them to pick. They wouldn't know. So it doesn't matter. They're both good quality, organizations and materials, but the homeowner is buying. They're trusting the salesman. right? So they're putting trust in the salesman, creating a relationship with the salesperson, and also, you know, that brand. So whatever brand that they're buying from, that's who they're going to remember. Not, I couldn't tell you, I'm in the roofing business right now. I couldn't tell you what's on my roof.
I can tell you what's on my roof. Here's a question.
Bad.
It is.
Fresh look.
Distributors, doesn't matter, SRS, ABC, Beacon, does that come into play for you?
It matters on the service side. Yeah. So like the name of who? No.
No, on the service side. But I'm saying, when you go in and you're evaluating to buy a company, you're like, oh, you're doing business with Beacon or ABC. No. I'm not going to.
No, it doesn't matter. No. Where the selection process comes in, which I thought that's what you're asking me. Where the selection process comes in is where, you know, one of those distributors could be just stronger in that area or
Correct.
whatever, and they're better at serving our brand. That's the only difference.
Here's a question for you: is do you believe there's a better model? I store my materials, or I ship directly to the job, and is there more value either way for what you're willing to pay on the turn?
So the only variable there is just the cost of capital. So if you have a business that's really, really heavy in inventory, that could affect the deal cost, the value of the deal, just because you're tying up that money. Now look, where money was free a couple years ago, nobody cared. You know, the HVAC businesses and plumbing businesses, they were stocking warehouses to the ceiling just because, you know, number one, it was supply chain issues, you had to. And number two, it didn't really cost anything to hold it. Now it's different, right? Money's not cheap anymore. And so, yeah, during the deal, it's not the model itself. It's not like one gets a better outcome than another.
Do you think there's a better model of the two, or do you think it's the operator?
I think it's how you operationalize it. Yeah, I really do. I think you can have two companies the same size with those two different models and both get great results. So it's how you go to market, it's how you're priced, it's understanding your cost and what to do with the work, and being priced right. So it doesn't, you know, you just got to build it into your algorithm really for pricing.
You know, the manufacturers have just done price increase after price increase. I think they've had 9 or 10 price increases in the last 2.5 years. I think it might be more now. I don't even know what it is. It's like it's gotten so far out of control. You've never seen anything like that in HVAC, because when private equity came in, they stopped doing it. Like it almost came. There seems like there's a rip between the manufacturers and all the private equity firms and all the roofing companies. Like there's just a divide, right?
Yeah.
They say they're partners, but are they? They just keep increasing pricing. They say they are being sold out, but they're not opening up new plants and manufacturing more shingles or keeping inventory levels at the same. Can you talk about what you're seeing there, and do you think it's going to change?
Yeah, I see all the things you're talking about. So, you know, it's the consistency of price increase. That's not based on, my opinion is, it's not based on environmental factors that are driving costs into their business.
Oh, you Google and see it's not.
It's timing. So every April we get a price increase, and every September you get another one. And so I think because of the sophistication that's being brought into the industry with the PE folks and the leaders that are coming into it and drawn to it, it'll change. Like it's just, you know, it's just going to take some time. But you know, you can't be a true partner if you're just saying I'm giving you an arbitrary price increase based on what your raw material haven't gone up in years, right? You just said it, like, so I shut down a factory for regular maintenance. That doesn't create a supply chain issue. That's poor planning, right? So they use all of these factors to kind of, you know, explain to folks why we need a price increase.
Well, they just make up shit.
And yeah, and honestly, at some point it has to stop. I mean,
do you
the
think
shingle
it's a
or the
monopoly?
underlayment or whatever, it's probably the closest industry I know that has the fewest OEMs.
It's
maybe we should go in the shingle making business.
Listen, I can tell you right now, if I could get a plant here open, do you know there has not been a new plant here open in America in the last 100 years?
I didn't know that.
Yeah, it's like 76 years. So I shouldn't have said 100. I think
Holy
like
smokes.
1950 something was the last time a brand came in. Like IKO is trying to come in from Canada and they can't,
right?
Because these guys don't get it. Like none of these people get it. It's just it's one big boys
I'm sure
club.
the environmental factors and all that stuff, they probably make it impossible to open a plant like that, but hey, it's got to get done.
Well, I mean, it's also, do you think it's that, or do you think it's all the kickbacks to make sure it never happens?
Yeah, who knows? I'm not that knowledgeable.
If you brought a new shingle company into the market here,
yeah,
it'd eat everyone's lunch.
Yeah,
It would.
I
A
agree.
shingle is a shingle.
Yeah, it's not. You're not building hearts. You know.
I think what's comical is the distributors make more than the shingle companies.
Yeah, that's.
If you go look
it's
at
an old model. It's too old.
If you look at if people are like, what do you mean the distributors make? If you go look at the quality, the P&Ls and the financial statements of where the publicly manufactured companies are, versus distributors fucking print money.
Yeah.
And all they are is a logistics company.
Yeah. Well, I think Home Depot just bought SRS.
I mean, they're a logistics company.
Yeah.
And Home Depot had that model, in-store model, before they even bought SRS.
That's right.
But it was just such a cash cow,
Yeah.
it made sense to them.
Yep. That's right.
You know, what do you think the biggest challenge is? What do you think the average size roofing company is in America right now? That you're seeing, that's coming across your desk. What's the average size deal coming across your desk? 7, 8 million, 9 million?
Yeah, I was going to say almost 10 million. Not $8 to $10 million in revenue.
8 to 10 million.
Yep.
And what's your sweet spot that you're looking at to buy?
You know, it's 15 plus, because when you start to get to that $15 million size, you have a full team. Your marketing campaigns are generally set up, so you're driving leads. So it's just a little bit of a more mature business, because a $10 million roofing business doesn't have to be very, you don't have to need a lot to get to 10 million.
You don't.
Because the average tickets are so big. So, I always think, like, we see a cutoff, like it's in that $15 million range. As a founder, you need to make different investments. And usually it's in the leadership team, usually it's in driving leads. And so for us, but there's not that many of them. 15 and 20, there's a bunch, but, it's...
You're in the 1% if you're at 15 million, 20 million. You're in the 1%.
Yep.
I mean, all retail, you're in the 1%.
Yeah.
It's funny because I was talking to Benny today, and I was like, man, he's like, how'd your February go? We just had months, because we know we're transitioning. I said, we're going to sell about 2 million, and we're going to install about 1.6 million. I was like, we could have probably had a better February. He's like, Lance, you fucking sold $2 million. He's like, that's a
There's
huge...
probably 2% of the companies in the whole country that sold that, including the non-snow areas.
Yeah.
So, yeah, it's not bad. It's not bad.
And that's where, I look at, but my other companies, though, they're growing, and it's funny you say that. It comes down to getting the marketing dialed, and that's the biggest thing. We need marketing, and you need salespeople that can actually convert the leads and understand.
That's right.
Let's talk about this with roofers, because you get so many companies that come to you, and I'm assuming you see some of these people that are like, yeah, I give great quality and great customer experience, and they sell at $400 a square. Can you talk about how that's just not a winning model, being able to sell that low?
I mean, at 400 square, some of the companies, that's what their cost is. So, that's where this whole cash thing comes into play. It's like, well, if it's costing you the same amount that you're charging folks, but you have money in your bank, it doesn't matter. Like, that doesn't matter. It's we do job costing. Mm-hmm. So, another thing that these founders should do is really start to job cost every single job that comes across their desk, because then they'll know, hey, I sold the business for X. I don't even like to talk about square price, honestly, anymore, because I think it's the commodity, that starts to commoditize the industry, if you will. So everybody's like, oh, what's your square price? What's your square price? I'm like, well, what was the value of the job, and what was your GP? I don't care about the square price.
So obviously, Service Titan is a big piece of the puzzle. Mm-hmm. You see, we built GP right in Service Titan, where our sales managers can see it right there. Yep. How helpful is that for you to be able to see the GP at the time of the sale?
Yeah, it's awesome. It's a great tool. It allows us to make real-time decisions. So you may not know that you got a price increase on a material, or your labor went up somehow, or some fixed cost changed in your model. But when you're looking at the GP live, you can change it the next day. You don't have to wait a month or a quarter or whatever. That's what's great about this business. You can change prices immediately.
What do you think of Service Titan overall? What do you think of Service Titan? I mean, I know you you went with them after I spent a lot of time with you going through it. What do you think of Service Titan? How does it impact you guys?
Yeah, it's good. We went live on our first brand 2 weeks ago. I think the visibility, the data, the reporting, it's world class. We ran it in the plumbing and HVAC business. It was super successful there. It's early days in the roofing business, but I tell you, they're making rapid adjustments to the needs, because it is a little bit of different need there, right? So it's more construction kind of based.
Yeah.
But no, look, if you're not, Service Titan aside, if you're not running your business on data, then you will never be able to get past that kind of $10 million lid.
Let's talk about going through the LOI process. Obviously, me and you went through the LOI process with Munns. Didn't work out, which didn't mean I didn't love you. Thought you were, listen, we became great friends. We stayed great friends. It was never a hard feeling by you or me.
No.
It was probably the hardest call I ever made professionally. One of my top 5 where I said, listen, Tim, I'm not going with you. And it wasn't you, it was your M&A guy was the reason.
Terms, yeah.
Yeah.
Terms,
you know what I mean? And it wasn't about the turn of the multiplier. It was like just other shit that we just couldn't agree on. Like,
that's right.
And because the multipliers were the same.
Yeah.
And the money was the same. And it's just like a few other things. And can you talk about like that experience when you're going through LOIs where it's not personal on either side? It's, hey, I got to be so upfront with you on what I want and what you want. Right. Either we can come to an agreement or we can't. Make sense?
Yep.
Because a lot of people, I think, just say yes, yes, yes on both sides instead of being truthful of, hey, listen, this is really what I want to make this relationship work.
Well, that's why we ask founders all the time, like, what does a good partnership and what does a good partner look like for you? And sometimes they just don't know because most people have never sold a business, right? So this is the first time they're going through it. So how would they know, right? So, but what's in that LOI outlines it'll outline the headlines, what's more granular in the purchase agreement. Yeah, so what's in that LOI is what you generally close on. The purchase agreement just follows up with way more detail, right? So if you see something in the LOI, whether it's non-compete language or non-solicit or the lease maybe in the LOI, right? So you want to make sure the demising wall comes back. You want to make sure that all the things that are important to you. So if you own the building and you're getting it leased back from the company, that's going to be important. What's your salary going to be going forward? That's important, right? Because most founders are used to living out of the business versus now I get a salary. So there are all of these things, and when you go through that LOI, usually they're 5 or 6 or 7 pages. Who knows? Just go through it and make sure. Sit down with your wife or whoever you have as a partner in the business, and make sure that those things are covered in the LOI, because that's the point to negotiate. Once you sign it, it's over. The negotiation is generally over.
Well, because then it becomes a retrade. That's where it just doesn't go well.
That's right.
I mean, think about this. Like, I had my LOI for probably 3-4 weeks now this time, right? Probably close to that, right?
Yeah.
And me and you were boys, and I was very honest. Like you were my number one dog.
I was going to drive over there and get it, and I was traveling too much.
Yeah, you were my number one guy,
yeah.
And I think you still know that. I would love to be with you. And how many other people would have just signed that LOI, be honest, and just sent it back?
No, not
at my position, but just that's their first deal.
I mean, we can usually get them if we've done our work and we've had conversations. Then the LOI doesn't just show up and now everybody's surprised. Like the LOI is through conversations and through calls and pre-diligence work and that kind of stuff. So usually by that time, some of them will sign them that day because everything we've already talked about.
Yeah.
Now it's just seeing in black and white.
They come pretty quick back normally.
Yeah.
And when the longer the LOI doesn't come back, the more
there's something.
There's something wrong.
Yeah.
And that's like anything in life. The biggest thing is with the LOI, I tell everyone is make sure you know who you're going to be dealing with. And that was my thing. I said, Tim, I'll work with you every day.
Right.
Someone said to me, Lance, you're not my cup of tea, but I could work with you and just get through it. And I was like, no, you can't.
Right.
Because if you truly think I'm not your cup of tea, every time you walk into the room, you're going to get fucking nervous.
There's always an issue. Yeah.
But I know to back myself.
Right? You don't want to go into, and that's part of the whole thing of this. Like, you may get the best multiple in the world, but if it's somebody you can't work with or somebody you don't see eye to eye on, then don't do it.
Don't do it.
Don't do it. That's my honest advice. Just find somebody that you know you can work with, will be a great partner for you and your team, and you may not get the most lucrative deal. That's okay.
I don't think the multiplier, and people say, well, Lance, you sold 5 companies, now you're selling your 6, so it's different for you. No, because here was a story. Do you know who Ken Goodrich is?
Yeah.
Yeah. And when I was selling Dylan, he called me up. He called me back because I talked to Geiger, I talked to Ken, like 2 other people, and Apex. And Apex gave me the LOI. I was up in New York, and Ken Goodrich calls me back. And now I had the LOI, and I just was getting ready to sign it. But my phone fucking rings. It's Ken Goodrich, and I'm taking that call.
Yeah.
I'm at dinner with my wife. And I'm like up in New York. I'm like, babe, It's Ken Goodrich. I'm taking the call.
Gotta answer.
I'm answering the call. This is the Godfather. Hold on. Ken's like, hey, Lance, what's going on? Sorry it took me so long to get back to you. You know, where you at in the process? I started talking to him. He's like, well, we want your business. Mm-hmm. He said, do you like who you're dealing with from Apex? I said, I love the guy, Jacob. I think he's an honest guy. I think he's fair. He's a young guy. He's hungry. He wants to get the deal done. He goes, I know Jacob. He goes, Jacob's will close the deal. He said, my next question to you is this. Are you happy with the number? I said, I'm ecstatic with the numbers, more than I thought it would be. He said, Lance, as much as I wanted your business, I'm not going to break it up. He's like, you're happy. Right. You like the guy. He's going to close, and you're happy with the number. He goes, I really don't have much more I can really offer to the table because all things are going to be equal. We're going to be around the same price.
That's right.
And he's like, Lance, me and you have a good relationship. He goes, I appreciate you.
No, it's good.
He's like, if something goes wrong, they're calling right away.
That's right.
That's when I knew. Like, you better take what you're happy with and not worry about just trying to squeeze every fucking nickel. Yeah. And that's why I never try and squeeze you. I didn't come back and try and squeeze you for another nickel. I just say, listen, it's just, like, it wasn't none of that type of shit. It's just, I think it's where people fuck up. They don't realize is, you better make sure you do business with the people you like.
That's right. Yeah. It's a marriage.
You're
in it, man. You're in it, and there's, to get out is ugly. It's just...
it is ugly, and...
It usually goes bad.
It does.
It shouldn't, though.
Let's talk, my last thing for you. What advice would you give to any roofing company out there that wants to scale and sell their business? What advice would you give them? Because you've been in it now, you've home services for years. What would you say?
I just started right at the top. Figure out how to get leads, right? So build your lead machine. Put your phone number on your website. That was a rough morning. No, I mean, figure out how to generate leads, like truly generate residential retail leads. Surround yourself with a great team, right? So figure out what your sales process is. Understand the costs of doing business and be priced right. And the rest of it, if you take care of your customers and take care of your team, the rest of it just kind of happens.
Thank you for coming, brother.
Thanks,
I appreciate it.
Good to see you.